This is Andy Hecht for the Martin Chronicle with a weekly report for the opening of markets on November 2nd, 2015. And this is a podcast to go along with the article that I've posted on the Martin Chronicle. Last week, the U.S. Fed announced once again that they were not going to raise interest rates, which came as no surprise to markets. However, the comments from the central bank did provide a surprise as the Fed upped the stakes for a liftoff in rates at their December meeting. We'll have to wait and see what basically is going to happen in December when the Fed meets. But markets are pricing in a Fed rate hike of maybe 25 basis points or something like that. Highlights of the week. I have a gold chart up here. As you can see, gold went up to around the 1180 and change level on the week. I think it traded up to about 1183.10, and then it absolutely dosed after the Fed statements. It went down $50 on Wednesday from highs to lows, and on the week it put in a bearish key reversal on weekly charts. So that's kind of a negative for the price of gold. And gold's little cousin silver did the same. So that is bearish market activity in gold and silver, and that doesn't bode well coming into the next trading week. That's what's going on in the precious metals. Now, in energy, crude oil had an interesting week. The crude oil actually moved higher at the middle of the week, and perhaps that's because open interest rose as the price was coming down, and maybe the market got a little bit too short. The fundamentals for crude are still difficult here. Huge supplies in the market, big inventories. That is a problem for crude oil. Turning to natural gas, that market absolutely dosed this week. And price got down actually on the November contract well below $2, down about a little bit below $1.95 per million BTUs. Now, inventories are rising in natural gas, and we are probably going to make new all-time highs in natural gas inventories in the couple of weeks ahead before the period changes from injections into inventory to withdrawals as winter comes. Now, those withdrawals will probably start at the end of November. But in any case, natural gas very weak last week, but ended on a positive note, a bullish key reversal on the daily chart on Friday. But I wouldn't get too excited about natural gas here. Winter is coming here, but I am very concerned about these inventories. Now, the market has gotten pretty short here, and that could fuel some volatility. I'm more bullish on volatility in natural gas than I am on price. Historical volatility has been edging higher here. We were down below 20% recently when I talked about buying options. Now we're up at almost 40%, and I think that that's kind of the state of affairs in the natural gas market in the weeks and months ahead. Copper continues to move lower. Base metals all moved lower last week on the London Metal Exchange, and we're looking at a chart here of COMEX copper, which has come down after, in the beginning of October, all commodities rallied up. Copper got to around 243 or so, but it has come down and closed last week just around the 232, a little bit below there per pound. The support is at 220, which is the August lows. I have a feeling we're going to go back and retest those. And remember, folks, copper has been making lower lows and lower highs since 2011. My target on copper is still $2. I think we make a new low there. I still also like the dollar, which has been putting in a good performance since the European Central Bank said they were going to lower interest rates a week ago Thursday. The Chinese came out and cut interest rates on Friday. We see what that did to the action in the dollar. The Fed, with their interest rate rise news in December, the potential for it increasing bolstered the dollar. But on Thursday and Friday, came off at a bout of profit taking. We'll have to see how that reacts for the rest of the week. One of the most interesting things going on in soft commodities is El Nino this year. And El Nino I think, will pick up huge volatility in these markets. And I want to show you a very interesting chart in the sugar market. If you notice, I have a spread chart up here of the March 2016 sugar contract, which is the active month now, versus the May 2016 sugar contract. So this is term structure in sugar. And as you could see, back here in August, we were trading at contango, meaning there were plenty of supplies around. In September, we moved up to flat. And recently, we have exploded up to a 35 to 40 point, that's 0.4 of a cent backwardation, meaning that the nearby March contract is trading at a premium to the deferred May contract in 2016. That tells us that sugar is tightening up, and we can see that in the price, which has risen from under 11 cents all the way up to 14.5 cents recently. That's why understanding market structure is so very important in all commodities, really. Turning our attention for a moment to the meats, we're actually seeing another spread here, the live cattle versus lean hog spread exploding higher as cattle prices have rebounded from recent lows at $1.28 back up to over $1.40, and hog prices have come down from 68 cents all the way down to below 60 cents recently. So we're seeing now that there is about 2.4 pounds of pork value in each pound of beef value. And the long-term norm for this relationship is about 1.4 to 1. So we're at 2.4 to 1, which is a divergence. And there's divergences all over the place in these markets, folks. So this is another inter-commodity spread relationship that is very interesting these days. Anyway, there are plenty of profitable opportunities in the weeks and months ahead in the commodity markets for those who understand these markets, those who understand market structure. The majority of these opportunities will come from the spread relationships within specific commodities or between related commodities. Martin Chronicle is offering a 12-session course on market structure and spreads in the commodity markets, conducted by yours truly. To learn more about the commodity spreads, including how to locate these opportunities and trade in these exciting markets, you can sign up at the Martin Chronicle for this course. This is Andy Hecht for Martin Chronicle, and I'll see you next week.